All right, let's get back to value investor Scott Black, president of Delphi Management. And Scott, let me ask you about the situation or your grade for the Obama administration, given unemployment. Do you think they've handled it well enough with the stimulus package that we've seen so far? Do you think they should do more? Do you think they should have done less?
Well, he inherited the mess from George Bush, but he asked to be president and he got the job. So I think they should have done more. You know, I'd hate to harken back to ancient history, but Franklin Roosevelt came in 1933 during the Great Depression, and although we had alphabet soup like NRA and WPA and TVA, these were real projects that helped America. Tennessee Valley, Hoover Dam. We just should have done something that was parallel with infrastructure to put people to work, giving them construction jobs, creating demand for aggregates, cement, structural steel. I know the money was in the $787 billion appropriation, but it hasn't been spent because we call big companies, little companies, the Amerons, the Floors, the Insteels of the world, and they've not seen a nickel of infrastructure spending incrementally because of the passage of the bill. And so I really think you have to put people to work in this country if you ever really want to get the economy moving again.
Do you think, though, that when that money comes out, and surely they're planning to spend the bulk of it next year, and if we get more legislation to give businesses tax breaks, to boost stimulus, even if it's called something else, that it'll affect the stock market? I mean, do you expect to see stocks continue to rise as the rest of that $787 billion comes out?
Well, many of these stocks have stagnated. Like most companies, they hit bottom on March 9th of earlier in the year when the S&P was at 666. But to a large extent, they've been trading back and forth. The backlogs of places like Jacobs and Fluor, obviously, they're negative. Ameron, the actual estimates for revenues and earnings are up next year. But overall, I think it'll be a positive, and the stocks may have another lift upwards once we see the revenue and the earnings materialize.
All right, so Scott, we do know you like infrastructure. You've liked that area for a while, and you say it still makes sense even though that stimulus money is slow in coming. I want to get to some other picks because I know pharmaceuticals is another area you've liked. Cephalon is one you like, not doing well this year. It's down about 26%, makes cancer pain drugs. First of all, Scott, why is it down so much?
Well, I think people are worried about Obamacare. It's a slow grower, although they don't have a patent cliff like an Eli Lilly. Their major drug, which is Nuvigil, the scripts are maybe growing 1 or 2%, but they have some pricing flexibility. They've taken about a 10% price hike. But it's a legitimate 10, 11% grower. The company has net cash at $250 million. If you net out the debt, you have no financial risk. It's selling at about 8.5 times next year's earnings. And this is a company that's consistently done over 20% return on equity with no debt over the last 5 years. It's just ridiculously cheap. You know, it's a medium-sized capitalization, a little over $4 billion, so it gets lost in the shuffle compared to the Pfizers, the Schering-Plows, the Bristol-Myers of the world.
All right. And Cephalon, though, is certainly a name that's known to a lot of investors. One name, though, that I know you like that's not necessarily a household name, Cliffs Natural Resources, the ticker CLF, up about 30% so far this year. It's been a bit of a volatile year, though, Scott. What stands out with this name?
Well, as you know, it's the old Cleveland Cliffs. They're the largest producer of iron ore pellets in the United States, basically up in the Massar range, but they also have ventures for coal and iron ore pellets in Australia and a joint venture in Brazil. At the last peak, which is hard to believe, was only a year ago, they earned over $650. The stock was over $100. We think that the earning power next year is $250, so it's roughly a 12 multiple on next year's depressed earnings. We think the earning power comes back to over $4 the year later, and you have to anticipate the turn in a cyclical. We know the steel capacity utilization is still in the 60+% range, but it's higher than it was maybe 3 or 4 months ago. You have no financial risk because the net debt equity in this company is only 0.10, so it's clean from a balance sheet standpoint. I think it's well positioned for the recovery. And at $32 a share, I think it's reasonable. If you get back to $5 or $6 in earning power a couple of years hence, you'll probably see the stock go to $60 or $70 a share.
Hey, let's talk about an emerging market play. In China, the stimulus money, of course, goes out whenever they say it goes out and instantly. What do you like there as a beneficiary of some of this money?
Well, we had a little company come visit us at Delphi called Telestone Technologies, and it's tiny. They have like 10 million shares. It's a 7.25 stock, so what, 72 million market cap. But the revenues are going to double from 35 to 70 million. The earnings per share are probably going to double from 68 cents to $1.40. It's a 5 PE. Return on equity is 15%. More cash than debt on the balance sheet.
Scott, what do they do? What do they do?
Yeah, they are a systems integrator for installing base, for cell telephone, the uplinks, the downlinks, the transmission, whatever is needed. And basically, the Chinese government has given money to the big telecom companies, China Unicom, China Telecom, China Mobile, and they mandate that they have to spend the money because it's a jobs program. To a large extent, People's Republic of China has created more jobs this year than we have, which is ironic. But the bottom line is the money filters down, and since this is only 70 million in revenue, it's a flea relative to the GDP. But it's an interesting play at 5 times earnings.
Right, and hitting a 52-week high actually today.
Telestone Technologies, TSTC. I'll tell our viewers before they start writing into the flurry of emails. Scott Black,
Thank you, Scott.
Thank you so much for joining us.